Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I've put in timestamps, so please use them to skip to the names that interest you. In the video on the 19th of January, I said that Apple completed a rising wedge, a bearish pattern, and the textbook target is at 181.39. Since then, Apple underwent the corrective phase and upside was rejected twice by the now resistance trend line. Switching to a daily chart just so that you can get a better look at how the price action was in the last few weeks. The corrective phase over here was soundly rejected by the resistance trend line, and we are having another upside attempt, one that I believe will also be rejected by the resistance trend line. And in the latest 4 days price action, we can start to see that upside bias has started to wane. Price action has failed to test the upper Bollinger, and the latest price action over here, I suspect, warrants a view that upside exhaustion candlestick has formed. So I'm staying bearish on Apple, believing that the upside will soon phase out to resume the bearish trend, target 181.39. I maintain a bearish outlook on Totalenergies in the last video on the 19th of January, but said that there should be further upside for the next 1 to 2 weeks as a form of correction. Totalenergies has corrected, and the last 2 weeks worth of decline over here and here, I suspect, is probably the end of the corrective phase. Now, chart patterns usually occur in three phases. There is the completion phase, and then there is the correction phase, then the resumption phase. I suspect Totalenergies will soon enter the bearish resumption phase, and the textbook target of this head and shoulders top is at 45.95. There is a support at 50.61, which remains unbroken, so take caution approaching this support because it could bounce Totalenergies higher when tested. Citigroup is a name that I last covered in the video on 19th of January. I cautioned that the closer Citigroup gets towards the resistance range of 80.2 to 83, the higher the risk of rejection. Now over here, despite breaking above the 83 level last week, Citigroup tumbled back below this range this week. So we have to consider this break as a false break and view that Citigroup has been rejected by this resistance range. Now Citigroup risks a drop to the next support at 73.8. If this support fails to bounce Citigroup higher, then we would have a deeper correction towards the 67.81. Moving on to FX, I highlighted in a video on the 8th of December last year that Euro-Yen may be forming a head and shoulder stop on the weekly chart. It took a while, expectedly so, because this is a weekly chart, but the second shoulder, I believe, is now fully formed. We now need a weekly close below the neckline at 154.41 to complete this bearish pattern that has a textbook target at 133.41. Also in a video on the 8th of December last year, I said that Kiwi Yen completed the ascending triangle and is bearish with a textbook target at 82.22. Kiwi Yen continues to converge towards this target, but so far has reached around 58% of its textbook target. I think there is still room to go further after recent price action appears to have been rejected by the 20-day simple moving average, and I believe upside bias is weak because despite over here breaking above the 20-day simple moving average for at least 5 times, upside failed to sustain. There is only one new coverage in this video, and I will start this coverage with the luxury name LVMH. I suspect LVMH to be forming a head and shoulders bottom with a slightly slanted neckline around 762.2. Now further upside from here will give me more confidence that there is indeed bullish intent, but LVMH must still close above this neckline to complete this bullish pattern, a head and shoulders bottom that has a textbook target at 960.1. But let's not get too excited because there are resistances at 822, 886.4, as well as 902.9 that must be broken in order for LVMH to move further upwards. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.